Welcome to Energy Unplugged, the go-to podcast focusing on the global energy transition. I'm Hugo Batten, Managing Director of Aurora in APAC. We're delighted to be joined today by Nicole Yazon. She is a leader in the strategy team at Aboitiz, the Philippines' biggest generator. She's also spent time at Oxford University, Shell, and Wood Mackenzie, and was originally a chemical engineer. She's very deep in the Philippines power market, and that's where the discussion is going to focus today. Nicole, welcome to Energy Unplugged.
Happy to be having this conversation with you.
We're also joined today by Patrick Tan, Aurora's market lead for wider Asia. Patrick, thanks for joining as well.
Hi, everyone. Thank you for having me here today.
Terrific. So, Nicole, for our overseas listeners, could we start by explaining the sizable opportunity in the Philippines power market? And by that, I mean, potentially very large demand growth given low per capita energy consumption, currently relatively low renewable penetration, and high wholesale prices, at least by international standards.
So absolutely right, Hugo. So there really is a very compelling opportunity and a great need in the Philippines for all of those reasons that you mentioned. But I want to emphasize that the energy demand growth that we're going to see is really underpinned by very strong macroeconomic fundamentals. And also, importantly, how we are starting from a very low base in per capita consumption. So to add a little bit of detail to that, the Philippine economy was the fastest growing in 2023 among the ASEAN and others like China, Japan, Korea. So except for 2020, I think the economy has been growing between 6 and 7% annually from 2012, and we expect that to continue over the next decade. Also, as I pointed out, the country has a very low per capita consumption. The average annual consumption of power is about 800 kilowatt hours per year, and to put that in context, that's less than a tenth of the average consumption that you would be seeing in Singapore, where Patrick is, or in Australia, where you are, Hugo. You would be closer to about 8 to 9 megawatt hour per year if you're the average consumer. So I hope that really illustrates how much more room there is to grow in this context.
Obviously the system at the moment is reasonably heavily dominated by coal and, to a lesser degree, gas. Could you talk a little bit about the kind of Aboitiz house view in which technologies you're most optimistic about? Because you at least based on the government plans, you've got declining coal and gas, you've got rising demand. So you've got a really big part of the pie to fill in there with something.
I can't share too many details about the Aboitiz house view, but I would say that it's not dissimilar to what the views are of, say, the DOE or even yourselves, right? So a lot of that growth is really going to come, as we see it, from renewables. But that growth in renewables has to be supplemented by firming and flexible capacity, so your gas and storage. That's really the story. And in terms of what the DOE is setting out to do, they're really ambitious about increasing the share of renewables in the mix. So the target is 35% by 2030, 50% by 2040. And as you said, we are starting from a low penetration of wind and solar. But I think today it's about 5% for wind and solar, and they're hoping to triple that by 2030 in terms of energy share.
I think the only thing I'd add is, the government does have fairly clear policies to support additional renewable growth. They regularly run renewable auctions. It's a little bit unclear how much those will deliver in totality, but the momentum is certainly there. And then there's also renewable portfolio standards on the retailer side to act as a pull factor as well. We're certainly working on a variety of different business cases, solar, onshore, offshore, and batteries, as you say, to fill in that kind of increasingly sizable part of the pie. Patrick, do you want to go to kind of some of the challenges there? Because we're at this stage, we're painting a fairly rosy picture.
Yeah, just like any markets, there must be clearly a set of challenges for domestic developers, just like yourself, or even for international developers. Nicole, would you be able to point us 3 to 4 challenges that could become a major handbrakes for the growth of power market for the Philippines?
Absolutely. Well, let me give you my top one, most difficult one, and then I'll name a few others. So for me, the top barrier and the most difficult one to solve is going to be the transmission infrastructure delays. And then a few of the others I would mention are the permits and administrative burden on new power projects. Second is probably the like high and increasing costs of capital, and in more recent years, inflation has also been an issue impacting project costs. Market design and existing structures are also difficult. So as you would be familiar, we have some price caps and other market interventions that are there for good reasons, but they also in many ways muddle the signal for investors.
Yeah, and it might be worth kind of mentioning again for our overseas listeners that the Philippines does have a fairly liquid wholesale market, and that's the primary, at least in theory, the primary driver of investment and dispatch. But it also, you know, like any market, has some unique factors, right? Like Meralco, who has a dominant position in the Luzon region, does a lot of bilateral contracting. So in that way, it's slightly more reminiscent of a kind of California and a PG&E. So it's a kind of interesting mix. And I think, Nicole, correct me if I'm wrong, it's something like 20% of the megawatt hours in a given year are traded on the WESM. And the WESM, you know, has been reasonably volatile over the last 4 or 5 years as well. And like any market, there's work undergoing on market design, but it does feel like market design itself is a pretty open question at the moment, at least how it will play out over the next 10 years.
Absolutely. So that figure is roughly correct. So 15 to 20% is traded in the spot market, and the rest is bilateral contracts. And you've pointed out Meralco. They have a very small geographic footprint. I think it's like under 5%, but the energy demand they're responsible for supplying is over 50%. So the prize for a generator is if you can get a Meralco contract long term, and it helps to underwrite a lot of projects. So you know, few peculiarities there. But going back to those challenges is if you're a generator trying to put up a new plant, then you don't have that many avenues to be able to secure the offtake to enable project financing. All of your other distribution utilities and electric cooperatives are quite small in comparison. We have the second and third largest, a few hundred megawatts each, if I'm not mistaken. But all of the rest are in the, you know, 10s, 20s of megawatts, that sort of thing.
Yes, it's pretty interesting to hear these challenges. And also for our overseas listeners, we have also seen quite a number of international developers struggling to enter the Philippine markets. And also given the government also taking initiative, trying to promote more international investment entering the market. Really a two-part question. Why is it so hard for some of these international players to enter the Philippines? And on the second note is, have you seen any good international developers that does a very particularly good job in building a presence or portfolio in the market today?
I think it's hard for any new players to enter, not only international. And those are for the usual reason. Incumbents like Aboitiz Power have the advantages of scale, of capability, long-established relationships, a very well-honed understanding of the local context, and the organizations are structured over the years to operate well in this specific context. And you know, those basic table stakes moves, investing and being on the ground, getting to know the system well, partnering with the incumbents that matters, those are table stakes. But it's hard to catch up to incumbents if you're trying to play the same game. So the question is also for these international players, how will they bring something other than their capital to the market and do something that the incumbents are not doing or not doing well? That's a challenge. And to the second part of your question on if there are any developers doing a good job, I'm not on the renewable project development side, so I'm not well versed on the landscape and the many competitors there. I'm much more focused on the main incumbent competitors. But our renewables arm has recently partnered with Vina Energy and Mainstream Renewables on some wind projects. So clearly, we believe that they have something to offer.
Yeah, I mean, Nicole, I think you've hit on it exactly. I mean, it is an interesting tension globally. The big players have scale, deep experience developing projects, but in a number of markets, I'm seeing more local, agile players who are very well connected, deep understanding of where the opportunities in the grid sit, kind of out punching their size. So, obviously there are kind of strategic trade-offs there. And it is worth, highlighting again that until relatively recently, the Philippines had quite strict local ownership laws. They've been materially relaxed. And so it's fairly early days as well. And, some of the big international guys are starting, but, they haven't spent years examining sites and those kind of things. So there's still a way to go.
Absolutely.
You mentioned grid there, and kind of every conversation in energy at the moment comes back to the transmission network. I think the Philippines is particularly complex. The NGCP is the one responsible for transmission additions and augmentations, but in each kind of update of their national transmission development plan, there have been some pretty material delays to transmission augmentation. And there's a lot of debate as to whether the Philippines has the right regulatory settings to incentivize new transmission and whether the ownership structures are correct and those types of things. But the NGCP are coming under increasing public pressure from the DOE, who's made a series of public statements on this. And it's basically build more faster is the push. How do you see this playing out, I suppose? Will we get the transmission? Will it be late? Will there need to be a regulatory overhaul? Do you have any kind of insights there?
Well, as you say, this always comes up. It's the first question to any forecasting conversation or a scenario conversation. And for us, certainly the transmission expansion and the rate at which they will deliver new projects is a huge uncertainty for our models and also for our project. And I would say that your team at Aurora did a nice analysis in your market forecast on the extent of delays and highlighting that just between 1 year's transmission development plan to the next, we are seeing project timelines substantially delayed and some by up to 7 years. So your question is, will we see big investments? We certainly hope so. Will it be late? How much later? Well, we've learned to expect delays, but we're among the many voices pushing for change here. And like I said, this really is, for me, the biggest roadblock to new supply coming online, especially for renewables.
Yeah. And look, I don't think there are any easy answers. And I don't think any jurisdiction, at least that I've operated in, has completely nailed the kind of regulatory structure to incentivize new transmission without the risk of gold plating. And typically, I think markets are moving too slow. We've done a series of podcasts on why organizations like Aurora don't get the modeling right on this as well. And we probably underestimate the benefits of transmission, but that's another wormhole we probably want to avoid in today's conversation. To flip to kind of Aboitiz itself. So Aboitiz, biggest generator in the Philippines, a diversified portfolio of both thermal and renewable assets. At a high level, what is the Aboitiz strategy? It's making investments in gas, in renewables, on the generation side. Is there a kind of neat way to encapsulate it?
Sure. Overall, I would say we're leveraging and growing a very diverse and balanced portfolio of both conventional and renewable energy sources. But let me point out maybe a few key elements to that strategy. So first, we're very focused on continuing to be a really reliable, cost-effective supplier. So we're continuously working to improve reliability, efficiency, and the competitiveness of the existing fleet. The second part is we're growing our portfolio and increasing the share of renewables and low carbon sources in the mix, particularly through renewable energy. So on that front, we're on track to deliver our commitment to add 3.7 gigawatts of additional renewable energy capacity to our portfolio by 2030 to reach 4.6 gigawatts. And that is roughly like a 50-50 split between thermal and renewables. More recently, as you pointed out, we've also entered the gas space through Chromite Gas Holdings. And then we're also keeping an eye out on other technologies and exploring, for instance, nuclear power. So that's kind of the second bit around increasing low carbon sources in the mix. The third bit is that we continue to look for opportunities to grow beyond our core business. So we're particularly interested in distributed energy resources and electric mobility, and we've launched a venture studio to explore those areas so that they can innovate without being stifled by the typical structures within the core.
You did touch briefly on gas, and again, the Philippines is interesting. I think typically the gas has come from the domestic Malampaya gas fields, but they're actually winding down, and there's some additional exploration happening. But at least most people I talk to who are gas experts in the region think that it clearly is a declining resource, and it's a matter of when. So there's a lot of LNG import facility activity, and the Chromite Gas Holdings, my understanding is it's both an LNG import facility and 2 CCGTs. So could you talk a little bit about the role of gas in the Philippines and how that sits in the Aboitiz portfolio?
Sure. I did co-lead the market and competitive analysis around that transaction, and I can talk a little bit about it now that it is public. So to your point, first, it's the recognition that we won't be able to meet rising energy demand with just renewable. So we'll also need that firming and flexible capacity in the form of gas and storage. And your own analyses at Aurora are broadly consistent with this, right? Would you agree with that characterization?
Yeah, absolutely. We've got coal coming out, new build gas capacity coming in. I mean, the only thing I'd stress is that is given current policy configurations, but no, we're absolutely aligned with that.
Absolutely. And I think when you say current policy configurations, the key policy point there is that there is no hard, I guess, incentive for lower carbon sources, So we have some of the structures for renewables, but you don't have something like a carbon tax that would materially penalize coal and gas. And so that really plays here. The second point I would make is that apart from the role that sources like gas play in the system, is that the Philippines is still a relatively small market compared to other countries, especially because of that low per capita consumption that we talked about earlier. So given that, even when I was in Shell Philippines and we were looking at the LNG supply opportunity, we knew that you needed some level of scale for this to be viable, but also there's not enough demand in the country for multiple terminals and LNG-based power plants, at least not to start with. And so, as you said, there's a lot of activity, multiple parties looking to put up their own terminals, their own power plants, and you might not get any of them off the ground, or maybe one party somehow manages it by stretching their resources and taking a lot of risk. And eventually that risk is going to just be passed on to the consumers in the form of added costs. But this going back to this transaction, bringing 3 major players together for the first time, it really is about leveraging synergies and coming together to build a platform that can operate at scale and hopefully lead to competitively priced and affordable power. Just to clarify, the transaction was indeed just about the LNG import facility and the CCGTs, but there is also room there for expansion. And so that's where you start to get into this fleet approach and get those economies of scale that I talked about.
Yeah, absolutely. You mentioned, I think, nuclear there briefly, and I think nuclear is emerging. I mean, it's always been a hot topic in Europe for historical and structural reasons, but it's becoming a big topic again in Australia, for example. And I think it's as people really start to think hard about the last 20 to 30% of energy decarbonisation. And particularly in the Philippines, it's going to be challenging because there's a real seasonal shape to both solar, but even more so wind, where wind output is typically very low in the hot, dry, and rainy seasons when demand is at its highest. And so it means that the diversity of renewable profiles is not as high in the Philippines as it might be, like, for example, in the US or in Australia, and that makes the firming challenge harder. At the same time, you know, the struggles of new nuclear have been well documented, cost blowouts, delays in the US and Europe, basically everywhere outside of China and I think one or two other countries. Do you feel like nuclear is a realistic option for the Philippines? And again, you know, the DOE has a 2.5 gigawatt target. They're talking about it a lot. But you know, if you had to bet money in nuclear in the Philippines over the next 20 years, how would you feel about that bet, I suppose?
Would we bet on nuclear? We don't bet until we know what we're betting on, and we have a good view of the case for it, right? So let's go back to what we were discussing earlier on what role would this play in the market, and it would play in the same space as gas and other firming capacity options. Maybe hybrid wind or solar plus storage could also compete if storage costs come down. But right now it has to compete against gas. And we know that nuclear will be better than gas from a carbon perspective. But considering that we don't have a carbon tax and we probably don't expect to have it, it also has to be competitive on cost. And also because the cost imperative is far more important in the Philippines than the decarbonization imperative. But to your point, there have been tremendous challenges in the nuclear sector and a very, very poor performance record of delays and cost overruns on the recent new builds we've seen, right? Especially in the West. And to add to those, there are really unique challenges in the Philippines. And I think the biggest one that I want to call out would be that the market structure is not suited to nuclear. So the generation sector in the Philippines is liberalized. The government cannot participate in it. And as you know, nuclear projects usually require some level of government participation, often an investment, a direct investment, and a lot of de-risking. So all of this to say, right now where we are is we are exploring, and we're very keen to support the Department of Energy on this. What we've done so far is to do a lot of studying. We've been to visit many of the nuclear powerhouses like the US, France, Canada, Japan. But we still have a long way to go before we can bet. And we're also still waiting for the legal and regulatory framework for nuclear to be developed.
Yeah, I mean, given some of these challenges that you have been mentioning about nuclear, and obviously we do need a lot of government intervention here to actually make nuclear a reality in the Philippines market. What's your view on the public opinion on nuclear, or maybe even in a general sense, on energy transition?
Just to jump in there, I mean, again, a lot of our listeners sit in the EU, and you know, obviously cost matters, but so too does decarbonisation, and voters have continued to vote for that even through an energy crisis. In your previous answer, you did say that, you know, reliability and cost is a much more important concern in the Philippines than the transition. Would you describe that as the kind of general public attitude or the view of policymakers? Like, where does the average voter in the Philippines sit, I suppose?
Absolutely, and it's important to make that distinction. Decarbonization is not a concern of the average citizen. In government and in industry, the need to decarbonize is increasingly recognized, but there's far greater emphasis first on cost and security reliability than decarbonization, and that is with very good reason. So just to put that into perspective, the Philippines has the second or third highest average end user tariff in Asia Pacific, up there with usually Japan and Singapore. And these days, what I'm paying is about $210 per megawatt hour, 12 pesos per kilowatt hour. At the same time, so we have the highest energy prices, but we also have some of the lowest incomes in the region. the mean median annual income for a Filipino household, not individual, is about 250,000 pesos or 4,400 US dollars. No, so if you do the math, that's about like 15% of their income is going to the electricity bill if they're using that average per capita consumption we talked about earlier. So cost matters very greatly in this context. And then on the reliability front, it's not uncommon, especially outside Metro Manila, to have sort of short power interruptions or rotational brownouts. It's due to a number of issues. Mainly it's because of thin and further thinning reserves, but also because we have an aging fleet. And then you have things like, low hydro availability, etc. But things that would be a cost for public outrage and you don't expect in your country, probably like not having power 24/7, we experience these things on a very regular basis in our country. So we have to address those issues and to do it in a way that does not worsen the high energy cost problem that we're already dealing with, and that is stifling the ability of the country to grow. So we need to address reliability and cost, not entirely first before decarbonization, but along with it and with a little bit more priority.
Yeah, some of those stats are really striking. I mean, I think, obviously, particularly in the academic literature, there's a lot of focused on the just transition within countries, but sometimes I think the academic community, but also organizations like Aurora, underestimate the kind of genuine fuel poverty issues in places like the Philippines, and just what percentage of disposable income does go on electricity, relatively small electricity bills.
Absolutely.
Nicole, we're almost at the end, but I always try and finish with a couple of, what we try and make a rapid fire questions. So, and they're always the same, at least when I host the pod. What's one out of consensus view you hold on the evolution of the energy transition? So I suppose we're asking you to calibrate your views against the herd or conventional wisdom. Where's one area that you think you hold a slightly different view?
Right. So this is me speaking personally, not as an Aboitiz employee. I am more optimistic about compelled by the benefits of a faster transition than most people. And I know this is rapid fire, but please can I give a shout out to the groundbreaking work on empirically grounded technology cost forecasts and their implications for the energy transition. It's done by my former supervisor, Matt Ives, Doyne Farmer, and their colleagues at the Oxford Martin School. So just as a teaser, they find that a rapid energy transition would create considerable economic savings while also meeting the 1.5 degree Paris target. And if we go slower, it's more expensive. So I won't say more than that, but check it out.
No, it's a great paper, and Matt Ives is an old Oxford pal. I think Cam Hepburn was also involved in that paper. And he was
it's
one
the
of Aurora's
same group,
yeah,
right?
one of Aurora's founders. So no, an excellent paper. We should put it in the show notes. And then a final question, and you've kind of already answered it there and given Matt a shout out. I hope he's listening. But aside from Matt, who do you read or listen to in the energy space that you think is always good, thought-provoking, and relevant to your work in the private sector?
Sure. Well, I do read a lot of academic journals still, but I'm lucky because I get to read for work and have access to paid resources. And we do subscribe to Aurora and are real fans of your work. But apart from you guys, we make it a point to get the full range of views, including the likes of Bloomberg, New Energy Finance, the Lanta Group, who focus on the APAC region, and all of the major providers of intelligence on energy and commodities. So that's one subset. The other kind of group that I'm seeking out more are thought leaders on communication, especially climate and science communication. And just to call out some names, I do like Simon Evans, Carbon Brief, Ketan Joshi, and then also Rachel Botsman, who is a trust expert at Oxford. And so, since I've started in the strategy team at AP, communication is really more than half of the work, even more than the analysis. So we always try to figure out a better way to tell the story.
No, that's a great list. And Simon in particular is excellent and has been to a few Aurora events and have met him. And he's a terrific guy as well as an excellent energy writer. A great and thoughtful list, Nicole. Awesome. That's been terrific. We've covered a huge amount of ground, although staying focused on the Philippines, and we've really enjoyed the conversation. Nicole, thanks so much for your time.
Likewise. Thank you.
And Patrick, thank you too.
Thank you.
That was Hugo Batten, Managing Director for Aurora in APAC, talking to Nicole Yazon, leader in the strategy team at Aboitiz. They were also joined by Patrick Tan, Aurora's market lead for wider Asia. Thanks for listening to Energy Unplugged. Do keep an eye on our podcast feed for more in-depth conversations with senior members of the energy industry. The best way to do this is to follow or subscribe to the podcast via whatever platform you use.